Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review, and I'm recording this mid to late Friday morning on July 21st. Just a quick announcement, I am doing a free webinar next Tuesday, so July 25th. I believe it's 2 o'clock Eastern Time, although you can't get the recording if you sign up. But I'll just go into more detail, a little bit more in depth about really my bullish view, looking out a few months, hopefully longer when it comes to the market. You know, the evidence does support us being sort of in a new bull phase. So I'll go into that, talk about some stocks, and do some Q&A too. So if you do show up live or want to throw in a question, I can answer it on the webinar. In terms of the here and now for the market, listen, this week did see some rotation, especially at the end of the week. There's like a rebalancing going on with the NASDAQ 100. I don't want to get in the weeds. So there could be some sort of artificial shenanigans going on in terms of repositioning, but I like to just go with what I see. And what I see here is, at least when looking at the shorter term, we have seen some of the junk start to rally. We've seen sentiment kind of pop up here. We've seen the market obviously have about 2.5 months of a rally, which is without any pullback, which is kind of around the time where people start to embrace the rally. You know, 6 weeks ago, it was like, why is the market going up? This makes no sense. It's only 7 stocks going up and all this stuff. Now, shorter term anyway, it's kind of like, oh yeah, the inflation's coming down and there's all these good reasons for it, okay? So I'm sort of, I think we could be getting close. I'm not a short-term guy where maybe the market does have its first exhale, or maybe we do see some rotation out of the mega cap tech stuff and all that stuff into the rest of the market. So because of that, I wouldn't be pushing the envelope here. Plus you have earnings season. Every stock I'm looking at seems to be reporting earnings in the next couple weeks. So I wouldn't be pushing the envelope here if you've been buying here. At the same time, intermediate to longer term, nothing's changed at all. Trends are up. Broad market's gotten healthier, if anything. Growth is outperforming defense from a bigger picture perspective. And leading stocks, there have been a couple of dents here, like Netflix yesterday or whatever. But even that is not good for the stock. But it's one of these things where the stock's had such a huge run. It's more weakness coming out of strength, okay? And it's probably, can put in a high for a near term. I don't want to get into Netflix, but we're seeing a little bit of that. If I saw 15 of those, yeah, that would be a little bit different. But for the most part, there's been no really 50-day line breaks, no real abnormal action out there to this point, okay? So I'm still quite bullish, but I probably wouldn't be pushing the envelope here, assuming you've been, kind of piecing your way in here over the last couple of months. Obviously, if you're loaded up on margin on all mega cap tech stocks, yeah, maybe you want to pare back. But other than that, we'd probably be holding your most, if not all of your, strong profitable stocks, giving them a chance to, consolidate, pull back, shake people out, and then hit higher highs here down the road, okay? In Cabot Growth Investors Model Portfolio, we haven't sold anything yet. We have been putting a few things on hold. We're about 16% in cash. Hey, maybe next week we're 30% in cash. Maybe we decide to sell a couple of things or get knocked out of a couple of things, honoring our stops. But overall, I think it's just managing what you have and seeing what happens. Like I said, I'm pretty bullish when looking out a while. So if we do see some indigestion, if we do see some rotation or just a general market pullback, sell your weakest ones, hold your strongest ones, look for some new names to buy, near support, that sort of thing. But I still expect higher prices down the road. Okay, let's hop on the charts. As usual, I'm using MarketSmith, product of Investors Business Daily. You can learn more at ibd.com and marketsmith.com. So here's the NASDAQ. Okay, this is kind of what I'm talking about. Depends how you want to measure it, but kind of got going here in early to mid-May. And it's just been, no pullbacks, of course. A little bit of a pullback here, but not even to the 25-day line. Now we're starting to see some selling here off the top in some of these names that are clearly extended. It depends what you want to do with those, like I was saying. If I'm not saying do nothing, take some partial profits. If you want to sell it and take the profit, go ahead. I'm just saying from an intermediate to longer term perspective, I can't see anything that's really abnormal at this point. But with that said, sure, you kind of had a few gaps here, kind of got hot and heavy. And as I'll talk about, there's some other sort of shorter term signs that are a little bit iffy. But on an intermediate term basis, we're not even down. The 25-day line is like another, I don't even know, what's that, 200 points away or 300 points away, something like that. So pretty good shape. The other indexes really have been acting better. So, they're actually up this week, and the broader indexes are up, whereas the NASDAQ's down, sort of thing. So S&P 500, no problem there. And then you look at something like the IWM, again, pulled back here, but still after this kind of nice, we finally saw that follow through thrust the last week or two. It's, hesitating here, but still well above its moving averages. Just going to run through this. Mid caps look fine. New York Composite looks fine, well above its moving average. So intermediate term trends up, obviously above the longer term moving averages. So no real issue there. Back to the NASDAQ, a couple of things. So the reason why I'm saying this short term is it's been 2.5 months. Like time-wise, it's a very, very, very general fence that can be leaned upon. There's no exact thing, but people are kind of more accepting of the rally, that sort of thing. We have seen some, junkier stocks. I know this was on news, but like this is Carvana, CVNA. They restructured some debt or whatever, but just, you're seeing some more of the speculative stuff really move, which is kind of a sign of that usually doesn't happen at the beginning of the move. Let's put it that way, the beginning of the intermediate term move. So that's a little bit of a red flag. You saw a lot I can't show it on MarketSmith, but I think it was last Thursday. There was 400 or 425 total new highs, which was the highest in a long, long time. That can be a little bit of a short-term contrary thing, okay? So it just kind of makes sense to me that, like I said, I wouldn't go out, if I bought a stock down here and I have a good position and it's up here, maybe you take partial profits, but I wouldn't be just selling, 5 good stocks I own, because they might pull back a little bit more and then really get going again or gap up on earnings. But at the same time, I wouldn't be pushing the envelope either, saying, oh, we're down 2 days on the NASDAQ, let me go buy 5 stocks. Okay, that sort of thing. Just some other stuff. So this has been a lockout rally so far. Eventually, you're going to get the first pullback, which can be a few percent in the indexes. We'll see if that happens. The other thing that doesn't take a genius to see is just, as always, here's XLP, okay, starting to ramp a little bit. You can just see the relative performance line perking up. Is it the end of the world? No, I wouldn't say it's the end of the world, but clearly, there's some selling in growth and some buying of defense. So, a little bit of a short-term character change. You see that in the XLV, which is kind of big cap, a little bit more defensive healthcare, not like biotech and stuff like that. So you're seeing some of that come up. Some of this is earnings, like Johnson & Johnson gapped on earnings. But you're seeing a little bit more money put into the defensive stuff and, out of the high beta stuff, if that's what you want to call it. With all that said, there's still a lot of, if you're not looking at mega cap growth, here's oil services, looks fine. A lot of these broad market areas. XLI, which is industrials, I've mentioned this before. I think I mentioned it back here. It's just been acting almost really kind of textbook here. Maybe it pulls back, but just acts totally fine. Hit a new high yesterday. And then the Dow Transports. This is the IYT. I didn't even notice this till a couple of days ago, but a very persistent advance to new. I don't think it's new all-time high. No, it's new. Multi-month highs, highest level in probably a year and a half, couple of years. So that looks pretty good. So there's just a lot of pockets of the market that are not even really pulling back. It's really more the NASDAQ and the mega cap growth. So if you're very heavy in that, you make the decision, but those could be subject to some more weakness. The rest of the market's still hanging in there pretty good. Just to continue on that theme. So here's, chip stocks were kind of the number one growth sector, AI and stuff. This was sort of the NVIDIA takeoff, and they've been sort of chopping higher. A lot of the individual names look better than the overall index, but you can see now it's pulling back in just to the 25-day line, but maybe it pulls back and has its first test of the 50-day line going forward. Not predicting that. Just saying, again, not sure I'd be pushing the envelope in these things after the move in some of them, okay? Same sort of thing with, this is like the IPO fund. It's had a good run, so now it's starting to pull back. So a little bit of weakness in growth. Broad market still holding in there. Short term, I'm, 50-50 on whether we get some weakness here. But bigger picture, I don't see anything really abnormal at this point. Another week or two, and, XLP, trust me, XLP's, way up here. And the NASDAQ, falls 5% on some day on some news. Yeah, no, I'll say that, the character of the market is definitely changing and could have some implications. But at this point, I would just say it's almost, I won't say it's expected, but it's kind of half expected in the sense of, we're going to pull back at some point. There's going to be some rotation at some point. We're starting to see that here, okay? In terms of individual names, I'm going to start with the non-growth stuff, okay, that I do think probably could be bought if they do shake out a little bit, if the NASDAQ drags down some other stuff. This is FTI. I think I've mentioned this before a couple weeks ago, but it was really one of the first oil service stocks to get going. It has had a big run. You have to, these things came, they've been out of favor for like 6 or 7 years. It did have this run here last year, or late last year anyway, before building this base. That was really its first major run in years and years and years for the sector, okay? Anyway, FTI looks pretty good. It hit a little resistance here, but you can see just kind of chilling out here as the moving averages catch up. That looks interesting. Noble, offshore drillers, again, out of favor for, whatever, since 2015, pretty much 2014. Nice breakout here, really just a huge volume cluster. Oil stocks don't work the same as growth stocks, of course, but my guess is, near-term pullbacks will probably find support, unless oil just tanks. This does have earnings in a couple of weeks, basically, but my guess is, the real focus is on the future here. So NE looks pretty good. RIG is, Transocean's a big company, but it's an $8 stock, so buyer beware. But it is a bigger, it's a $6 billion market cap. Trades a lot of volume, but same sort of pattern as NE, not quite as strong, but a lot of volume in there, big backlog, earnings in a week and a half, that sort of thing. So oil services look pretty good. Some of the infrastructure stuff, again, looks fine. This is Maztec. I've mentioned this before, MTZ. It's, you wonder, it's kind of looks like it might want to lean down a little bit here, but overall, whatever this was, 10 weeks up in a row, you kind of have this nice tight 3-week, it's not a super volatile stock, but tight 3-week consolidation. My guess is, that wants to head higher. Chart Industries is a little bit more of a, not off the bottom, but it had this big bottoming formation, persistent advance. Now it's pulling back a little bit. That's in the infrastructure group. Some gaming names, not so much China, but elsewhere. This is MGM, just, a nice, it looks like the market. It kind of had this bottom back here, rally earlier this year, nice big flat area, and just kind of broke out recently. As I'll say in a second, like if you have a growth stock that's just breaking out now, that's a little bit not so, because the leaders probably for those areas maybe broke out a month or two ago, right? But some of these other areas that didn't really, lead the rally initially, when you do get some of these breakouts, they can work. So MGM is off to a good start. Not that's going to be your biggest moving stock, but certainly looks pretty good so far. Thor Industries, this was in top 10 this week. This is like RVs, again, kind of a turnaround situation. Earnings are going way down, but that's kind of what the stock had discounted the last couple of years. Now it's looking ahead to some growth next year. Nice kickoff here. It's extended, but again, you're looking at some of these things where if they do pull back reasonably into moving averages, they could be interesting. And then just kind of the sort of on the infrastructure thing, the construction aggregates. You've had this is Martin Marietta MLM. Let me make the chart more, just so it's easier to see, dynamic. You had the nice breakout here in early May and just a solid run for whatever, month and a half. And now, you're 3 weeks into this consolidation. Like everything else, got earnings here next week pretty soon. Maybe you get another little wobble in here, but, you're getting towards some decent risk-reward situations. Vulcan Materials, same sort of thing, VMC. Actually looks a little bit better, but you kind of had this nice run, very tame consolidation so far. Maybe it gets yonked a little bit more, but a lot of these broad market names look, they look like the growth stocks did maybe 3 weeks ago, meaning like they really can't pull back much, at least to this point, okay? So there's a lot of stuff there, oils. I didn't even mention like airlines, Delta, stuff like that. Maybe you get kind of a shake in here, but it would look totally normal overall. Last one on this front, I just want to mention, this is Apollo Global, kind of a bull market stock, asset manager, alternative asset manager. But, had this, 10 days up in a row. Again, just kind of straight sideways in the 25-day line, stretching in here. So you're kind of looking for some rest periods, pullback, something like that, going forward in some of these names. On the growth side, like I mentioned, breakouts are, it's not something I'm really buying in growth right now, this second, because, again, like maybe the leaders already broke out. Maybe after a pullback, we'll see. But I have to say, so far, this is ProCore, which I've mentioned before, PCOR. Let me go back to the other, boop, a little bit tighter. Nice bottoming action. This is really a very, very nice base in here, and then a nice breakout last week. We'll see what happens. Maybe it kind of chills out if the market pulls back, the NASDAQ pulls back. But so far, it's holding above this level. The longer it can do so, the better the odds. On holding, I've mentioned before, this was sort of this. I was talking to a hedge fund manager this week, a guy I know, and we were talking how this was almost kind of the last gasp. This one and like Axon, I think. They got hit on earnings, and it was like the last gasp of sort of the bear market and growth, I guess I would say, right before things really kicked into gear. And so that's kind of what we saw here. And you wonder if it was just, it's almost like when you see a huge gap up on earnings in some stock late in the bull market, and then it immediately fails, because it's kind of just overhyped. It's almost like immediately this thing started working its way back. We'll see. The RP line, it probably needs some work, but I'm just keeping an eye on it. It's a great story. They don't have earnings for another month or so. But it's a great story in here, and maybe it just needs some time, but on holding is something that's on my watch list. And if it does have a little bit more seasoning, I'd be interested. This is intracellular therapies. Biotech hasn't been where the strength is, but it's had this run. I remember mentioning it back here, and it's just kind of gone dead. It hasn't done anything wrong. It just kind of pulled back. It bounced. You can see what it's done. Now it's kind of, it looks choppy, but it's basically just in this pretty tight, 7-point range, 60 to 67 or whatever. So just kind of keeping an eye on it, seeing if it can't push higher here, if there's some rotation into biotech. Dynatrace, this is kind of more into the regular tech. Again, kind of tried to break out of this little tight area. It's coming right back in, but overall, it depends how you want to play it. But some of these things, you'd like to see it find support, but some of these things are getting to be pretty good risk reward entries. So you take a shot. If it doesn't work, you take a paper cut. You don't take a big hit. Samsara it's kind of funny. I don't want to, I'll just say it. But if you go back and look at actually this whole thing kind of looks a little bit like Shopify did before it really got going in 2017. We bought it on that breakout. I'm not saying this is going to be the next Shopify or anything like that, but it does kind of have this huge IPO base, year and a half long or whatever it's been at this point. I think it's more than a year and a half. Some very big volume clues, buying, on the way back up. And now it's kind of 6 weeks into this zone. Again, if the NASDAQ pulls in, this is probably going to pull in, but just kind of flagging it. It's also on my watch list. Doesn't have earnings for not till the end of August. So I'm just kind of flagging it and seeing if it can consolidate here and eventually stage some powerful breakout of this entire sort of IPO structure. Okay. A couple other names here. DigitalOcean. It's one of these crazy ones, but I'm just sort of flagging it because it had this, it did pull back sharply sort of with the market in late June. And then instead of sort of bouncing a little bit, it really powered ahead to new highs to $50. It's a wild child for sure, but DOCN, just a name to keep an eye on. Palo Alto Network, so it got hit here on the Microsoft news and then bounced pretty well back to 250. Now it's kind of wiggling around here. Is it done? Who knows? What I would just say is you kind of have this big base, you have a nice breakout, you have a nice 7-week run, and you have kind of a shakeout to the 50-day line. Again, maybe it fails. Who knows what happens? I'm just saying some of these things are approaching decent risk-reward entry points if you're kind of generally using the 50-day line and stuff like that as a stop or whatnot. A couple other names just to keep an eye on. This is, I've mentioned NextTracker, NXT. I keep watching Solars. I'm like, maybe they'll get going. They haven't gotten going yet. In fact, a lot of them look pretty sloppy. But this is a new one. It's got great numbers, great sales and earnings growth, good estimates, growing sponsorship. It's already got 300 funds. I don't know. It's pretty good for a few months. And it had this was sort of a share offering not from the company, closely held shares, but it did find support on this. So, now you're kind of 5 weeks into sort of maybe a launching pad here. Let's see if it can kind of round out here going forward. And that looks pretty good. And then one last but not least here, we got in the retail, Ollie's Bargain Outlet. This was in top 10 too. It's been a turnaround waiting to happen. The sales and earnings have turned around pretty nicely. It's a long-term cookie cutter story, but the stock just couldn't really, tried here, just couldn't get going. I'm not saying this is a perfect base, but you have seen some nice volume clues here in the last few months. And now the stock is kind of letting loose on the upside. I wouldn't say it's, it's not overwhelming volume, but it is pretty nice. So just something to keep an eye on. Again, sort of outside of tech, software, cloud, AI, that sort of thing, is Ollie's pretty good long-term story, okay? So just back to the market, we'll see what happens. Like I said, there is some rebalancing going on today. I don't like to get into that stuff because you can always find some reason of why the market's doing whatever. Maybe that's having an impact. I think it's just simply that, we had this run, we pulled back, we had this run, it got a little hot and heavy here, a couple of gaps, good news, inflation, all that sort of thing. Plus we have the Fed next week, probably going to raise rates. So it would just kind of make sense that maybe we do pull in here in some of this. Maybe we rotate, maybe the entire market pulls back, that sort of thing. So how you want to handle that is up to you. I'm not doing too much yet, but maybe we prune here and there going forward depending on how our stocks do. But overall, I think, again, my main message is, when you have a big bear market, which we did, especially in leading stocks, you have a pretty long consolidation, like, bottoming area, and then you have some real decisive strength on the upside, not just in the major indexes, but in new highs and breadth and, leadership, new leadership. There's no sure things in life, but I like to play the odds in the market. That's the best you can do, in my opinion. And the odds, favor that we're going to see higher prices down the road. So dips should be generally buyable. It's just that maybe this dip isn't, 2 or 3 days. Maybe it deepens a little bit, especially with some of these leaders having had some big runs. Okay, I've talked enough. I hope I see you on Tuesday at the free webinar. Remember to sign up for that. Have a great weekend. That's all the time I have for today. As always, thanks for watching, and I will be back again next week for another Cabot Weekly Review.